Hey guys, good morning. This is Eric with Inspired Trading. I hope you guys are having a wonderful day. I know some of you guys got hit with that hurricane and power's out. Hope you're safe. All right, let's get to it. Let's look at the Dow Jones Industrial Average. We're on a weekly chart, so we have some interesting things that have developed. We did get a nice little bearish uh, move to the downside. We have crossed the 20 and 50 period moving average. Below, we have the 200. If this 200 is visited, we could see a lot of selling pressure in the market. I do eventually expect that. One thing we need to keep in mind is that we did have a nice little bearish move to the downside. This move is still intact because we did not violate the upside. What I mean by that is up here we have resistance. Okay. Price never broke this area and retested the move to what we want to create is what I call a higher high, higher lows. Everybody knows that. We did not do that. All right. But what we did do is um, we did establish another resistance point right here, and we have a little bit of pressure to the downside. Now, since this top level wasn't violated, what it means is that this play is still intact, meaning that this bullish move to the upside is possibly not a new trend to resume upward, but more than likely just a correction of this move. Okay. The reason why it's just a correction because this upside was never violated. If it was violated, then we can just disregard this. All right. But since it didn't, this is just nothing but a correction of a bearish move. All right. So now that we do have some form of price now starting to retreat and turn around, we can look at our key levels of the Fibonacci. We did cross over the 23%. We can see if price maybe can range back and forth in this area, but we want to see the weekly counter close below this 23%. Of course, we got all these levels that we could visit, but I see a lot of room for us to visit to the downside. All right, we have all this that we could cover. Okay, so being a technical investor or even a technical trader, you make all your plays based off of qualifying events. That's what we call it in our camp, qualifying event. All right. We like for instance, normally if price touches the 20 or 50, you look for opportunities either to short or buy. So I'm just going to go down on a 1 hour chart and I'm going to show you what some technical traders may have done. All right. So you see right here, you had what? Yeah, quick. Let's see. Let's do this. Sorry. All right, what do we have? We had what price come up, touch the 20, and we got some nice little rejection. It's basically serving as resistance. Okay, even if we broke above here, it's not a clear cut that we're just gonna go north. I mean, we do believe that we would if price did cross over and head to the top, but we have this level of resistance with the 50. So the 50 period moving average will serve as another resistance zone as well. So if we did break above um, and we shown some bullish candles, then possible. Of course, we tried to break above here, but we failed. But if you look left, what do you see? You see that this used to be an area of market structure or resistance, and all it did was just follow that. So that's why price turned around. So when you're trading, you always also got to look at the whole entire chart, see where there's potential resistance zones, etc. So for instance, if price broke above here, I immediately have to look left and look at all this traffic. We'll have to fight over this traffic. Even if we cross over this traffic right here, we'll go ahead and put a resistance line here. All right, what we have is we still got to account for this. Okay, so it's not always what we call clean traffic. Okay, we love clean traffic. All right, more so just sit back and let the price do what it want. But when you have some roadblocks, you got to take it into consideration. So that's on the hourly. All right, we're still below all the moving averages. I believe. Yep, 250 and the 20. But once again, let's go on a weekly. Matter of fact, let's go to the monthly and let's see what's happening on the monthly chart. All right, so now we're on the monthly. And with the monthly, let me see. Crunch this down for you. All right, so now look at this. So look at this on a 20 moving average. Price is it's above. Okay, it's above. So you got to keep this in consideration. Now this 50 is sitting right here. Price could come down, but essentially we gotta close above. I mean below really this area. All right. I'm gonna go ahead and take this out for right now. We need to close above here, and then that's when we can start thinking of okay, yeah, it's time to start coming back down here. Okay. We can also once again we can take the swing low to swing high, see what levels. Once again on the monthly, there is a 23% crossover. Um, 38 is the next region, of course, the 50 and 61 and so forth. Okay. I call these the sweet zones. This is where I make my money. This is where I like for price and stuff to go. I don't really care too much if it go even deeper into these other areas. But what I mean by I make my money in these areas is that if I'm taking out put contracts from short and whatever the case may be, these are some of the target areas that I'm looking to. All right. Some people are traditional buy and hold, so they will wait for these areas to be hit and then they start building their positions and loading up on. Okay, so sometimes I do use that, but I think with all the economic climate coming up, what we're dealing with pandemics, etc., what I think there's going to be a lot more selling pressure probably. So I wouldn't be looking to buy long term. Instead, I'd be looking just to trade. All right, but being very technically sound and following a trade plan. But right now, I think we're in on a higher time frame. I'm not doing anything. I probably would have done something right here had I been paying attention early in the week or month or whatever. Um, when price came here, this was buying opportunities, and yeah, you would be up right now. Now, is it drastic? I mean, we're on a monthly candle. Price came down to 26,237, and it's currently up at 26,510. So that's a pretty good, decent gain. Okay, like I said, it's the monthly candle, so a monthly chart, so it doesn't look like it's much, but it's a lot going on here. I mean, look right here. We had what price came down, tested this area, and look at this. Look. Okay, look at this move. Okay, look at this wick rejection. All right, a lot of the bulls came into the market. Um, although we're at the end of the month, towards the end of the month, we got 1 day and 6 hours left. We may not get this type of reaction, but we need to see what November how it, plays out. Um, we can go back to 2016 and we can see what happened in that November. Uh, here we go. What is this? This is January, February, March, April, May, October. All right. So we had nice little bullish for on November 2016. Uh, when Trump took office. All right, so we don't know um, how the market's going to react for next month. Let's see what these candles, what this we can do. I mean, you look at these big, huge candles up. We never know. I mean, we can get a drop, we can get a spike. Like we don't know, but just need to be prepared. I hope that helps. I'll be doing more videos. Have a great one.